Good afternoon, everyone. I'm Michael Diviney, Executive Head of Thought Leadership at Chartered Accountants Ireland. You're all very welcome to our webinar today to discuss new opportunities and challenges for an important cornerstone of the Irish financial services sector. A feature of cities and towns and villages throughout Ireland, credit unions have played a key role in the day-to-day finances of many Irish people and communities for over 60 years. Ireland's credit unions are entering an exciting new phase, with recent developments presenting opportunities and challenges to adopt, change and grow, particularly arising from proposed legislation amending the Credit Union Act. I'm very grateful to our experienced and expert panelists for joining us today. David Malone, FCA, who is Chief Executive Officer of the Irish League of Credit Unions. Hosford, CEO of the Health Services Staffs Credit Union. Professor Anne Marie Ward, lecturer in accounting at Finance at Ulster University, who has extensively researched the credit union movement. And Jean Boyd, FCA, author of The Governance of Credit Unions in Ireland, a comprehensive guide for boards and board committees, which was recently published by Chartered Accountants Ireland. The webinar will begin with a presentation by Jean Boyd, outlining forthcoming changes from the Credit Union Amendment Bill and arising from the Retail Banking Review. Jean's presentation will then be followed by a panel discussion of the issues raised and more. I'll then put your questions to our experts. For asking questions and submitting comments, please can you use the Q&A feature on Zoom. So to begin, it's my pleasure to introduce you to Jean Boyd, a fellow of Chartered Accountants Ireland. Jean has extensive internal audit and governance experience. He is chair of the Audit Committee of Kerry County Council and a member of the Audit Committee of the Department of Public Expenditure and Reform. He has contributed to the governance of various credit unions and is currently on the board of Member First Credit Union. Jean, over to you.
Thanks, Michael, and good afternoon, everyone. Let me just share my screen with you here. Okay, good. I think we're ready to go. So this is just maybe setting the scene for the panel discussion afterwards. So beginning just with some introduction, some basic information, I guess, on credit unions. So the first thing that distinguishes credit unions maybe from other financial institutions is that credit unions are not-for-profit financial cooperatives and very much member focused because they're owned and controlled by the members. So there aren't any shareholders. We're not interested in share prices. There's no focus on returning a good profit at the end of the year. It's all about the members and the services that we can provide to members. As Michael mentioned, they're an important part of the Irish financial services landscape. And in total, on the island of Ireland, there are approximately 3.6 million members. And some of that is because people can be members of a number of credit unions. So it's not that almost the entire population are members. Many are members of more than one credit unions. Credit unions go back more than 60 years, again, as Michael said, the late 1950s. And across the island of Ireland, there are more than 300 credit unions. So they're pretty much in every parish, or everyone has access to a credit union. And a significant figure is that credit unions hold more than 17 billion in savings and have loaned out money to members in excess of 5 billion euro. So again, a significant player in the Irish financial services sector. In terms of legislation and regulatory environment, the Credit Union Act 1997 is the principal piece of legislation. It was amended in 2012. That was the last amendment of the Act. And there were particularly large changes at that time, mostly relating to governance of credit unions. So when we talk about legislation, we talk very much about the Credit Union Act 1997 as amended in 2012. Also, the credit unions are regulated by the Central Bank of Ireland, and there's an office within the Central Bank with the Registrar of Credit Unions. Currently, Elaine Byrne is the registrar, and the bank supervises credit unions along with all the other financial institutions in Ireland. And then what our purpose of our discussion this morning really is flowing from the Credit Union Amendment Bill 2022, which is currently before the Dáil and includes several significant changes for credit unions. The first major legislative change for credit unions since 2012, and there's a strong focus in this new bill on collaboration between credit unions, and I think that's where a lot of the opportunities will arise in the future for credit unions. This bill has had a fairly long gestation period. There was more than 2 years of stakeholder engagement, and more than 100 proposals have been considered. So a lot of work has gone into this bill, and currently it's before the Dáil and there are amendments being considered, so it's not finalised yet by any means. Again, reflecting, I suppose, the desire to get this as right as possible and to give credit unions the best platform possible for going forward into the future. It's quite a technical bill. There's a lot of referencing to the 2012 amendment and also the 1997 Act. And as I said, it's currently being considered at the Dáil at committee stage. The expectation is that it will be enacted during 2023, but for the full benefit of the bill, there will also need to be amendments to regulations, and the central bank will deal with that. So the bill, or when it becomes the act, may be enacted in stages during 2023 and beyond. So what are the main provisions included in the bill? Well, the first one is the establishment of corporate credit unions. And by that, it means that credit unions can come together to be part of a corporate credit union. So the members of corporate credit unions will be credit unions themselves. And this is quite an exciting concept because it's, again, focusing very much on the thrust of collaboration that's set out in the bill, allowing credit unions to work together in a cooperative manner to help provide better services for members. There's also an amendment included in the bill allowing corporate bodies to become members of credit unions, incorporated or unincorporated, so both to join a credit union with the same rights and obligations as a natural person. Currently, credit unions are restricted to natural persons being members of the credit union, but this would give a new opportunity and would be particularly of interest maybe to small businesses who may be interested in accessing the services of credit unions and can, with this amendment, can become members of a credit union and have all the same rights and obligations as existing members do in a credit union. Another interesting provision in terms, and again, focusing very much on collaboration between credit unions, is the idea of services being provided by one credit union to members of another credit union. And a good example of this is, I suppose, the provision of mortgages to credit union members. Some credit unions provide mortgages. They're in a position to do so, maybe because of the size and their strength of their balance sheet. Other credit unions may decide not to provide that service or may see it as a risk or just don't feel comfortable providing it. So if I'm a member of one of those credit unions that doesn't provide a mortgage opportunity, then in some way I'm a bit disadvantaged compared to members of another credit union who may have access to mortgage products. So this will allow a smaller credit union or a credit union that currently doesn't provide mortgages to refer members to other credit unions that do provide mortgages, and in that way provide that service to their members. There will be obviously some work in making sure how that will work smoothly, and that the cooperation between the credit unions can work in a seamless fashion. But it is a very good example of where credit unions will now be enabled to provide maybe broader range of services to their members than is currently the case. So again, something that will probably evolve over time, but the ability to do so is being provided in this legislation. And then another key provision is where credit unions can participate in loans to members of other credit unions. And I suppose the example of this would be where maybe there's an application for a relatively large loan to a credit union that may be outside the risk appetite of that credit union, and they would like maybe to share that loan with other credit unions, so that would be a way of spreading the risk, as it were, but again, being able to provide that service to their members. There are several other provisions. There are provisions around governance as well, and but I guess this morning we're focusing very much on the opportunities that are there from this legislation that will enable credit unions to provide more and better services to the members. So the provisions, they offer significant opportunities, and we will consider those later in this webinar. At the same time, there is a context in terms of the banking situation or the banking environment in Ireland. There's recently concluded a retail banking review, and that was driven by the departure of the two major banks, Ulster Bank and KBC. And this review was very wide-ranging and also looked at the credit union sector. And I have a quote there just included in that credit unions could play a greater role in the provision of retail banking products and services in the coming years. So a very strong endorsement of credit unions. We're not seen as side players, we're seen as a player that could play a larger role, a stronger role in the provision of retail banking products and services in the future. And there's a recommendation, again, within the review, saying that credit unions sector should develop a strategic plan to deliver business model changes to be able to exploit opportunities that are there in the future. So on the one hand, we have the legislation giving us opportunities like the corporate credit unions and the referral of members from one credit union to another for services that their own credit union doesn't provide. And then we have this review saying very strongly that credit unions have a role to play in the future in Ireland in the provision of retail banking products and services, and to develop a strategic plan to deliver on that. So that's going to be a challenge and I suppose a work task for credit unions, for the sector generally, to be able to deliver on what is possible in the legislation and also what's being encouraged in this retail banking review. An important aspect, again, that was recognised in the review is that the services should continue to be community-based. And I guess that's reflecting the ethos of the credit union, where we're very much focused on delivering services to members, whether it's in our communities or whether it's in to our work colleagues or the occupations that go to make up credit unions. So again, we're not going to lose our identity, or that's the clear direction that this is moving in, that we keep our identity, that we keep, I suppose, the history and the services that we have, reputation that we have built up over the more than 60 years that credit unions have been in Ireland, but that we continue and expand our role in the provision of retail banking products and services. So in summary then, we can see that the bill and the review point to new opportunities for credit unions and also demonstrate confidence in their future. So I think that's good that that is clearly recognised, that, as I said, we are seen as being a very important player in the provision of services, financial services in Ireland, and building on that, going forward to provide better and a broader range of services to our members in the future. Importantly, if we're going to be able to deliver on that we have good levels of governance in our credit unions. That has been, I suppose, a cornerstone of the reputation that credit unions have developed in Ireland, the high respect that members have for their credit unions. To maintain that and to go forward, in high levels of governance need to be maintained as well. So finally, just to summarise by saying we have the strong reputation, we have the opportunity now through the developments that are included in the Credit Union Amendment Bill. We have the confidence of the, I suppose, people that we can deliver on those, and our next step is to go forward and deliver successfully into the future. So with that, I suppose, scene setting, I'll hand back to Michael and to take on the rest of the webinar.
Thank you, Jean, for that most informative account of the forthcoming changes affecting the sector. And now to our panel discussion. Again, if you have any questions or comments on the presentation or for the panel, please can you use the Q&A feature on Zoom, and we will have a question and answer session around 12:45. So we should have plenty of time to answer questions. We already had a question from one participant about will we circulate the slides. So we'll circulate the slides from Jean's presentation to all those who registered for the webinar today. So my first question is for David Malone, CEO of the ILCU. And David, are there new opportunities for credit unions arising from the exit of KBC and Ulster banks, the retail banking review, and proposed changes to the governing legislation?
Yes, Michael, I'm delighted to be here. Just a bit of background. I suppose the RCA Credit Unions is the leading advocacy body for credit unions on the island of Ireland. So we have a presence with credit unions in the north and the south of the island as well. There's great opportunities, Michael, and I think it's hugely encouraging the developments in the sector that we've seen over the last number of years in particular, and particularly what we're going to see going forward. I think it's important maybe in that context to look back at the distinctive DNA of credit unions themselves, and Jean has touched on that. Particularly, I suppose, our footprint nationally. We've 500 locations up and down the island. That's more than the 3 pillar banks combined. And that really gives us that community focus, particularly in terms of our common bond, where we've that focus in terms of communities, or those who work with a trade or profession have an industrial common bond. Credit unions are very different. They're owned, they're operated by their members. Their decisions are taken locally. That's important. So you go into a credit union, you're not met by machines in a bank. Instead, you're meeting the people. You're getting the opportunity to meet those people who actually make the local decisions themselves. And I think, coming on to that future perspective in particular, looking at the recent developments in the sector. So digitalization, for example, there's now many credit unions have online applications. They've loan applications, online memberships. I think in the last year, there was 75 million electronic transactions in credit unions themselves. And on top of that, current accounts, there's now over 80 credit unions in the Republic of Ireland, about 200 locations offering current accounts. So 1 in every 10 current accounts now opened in Ireland is a credit union current account. I have one myself. It's based on an app on the phone. I use the app myself. I use Apple Pay. There's a debit card if you so wish. It's best in class. And on top of that as well, of course, you get that unique aspect where you can discuss it with the credit union themselves physically. If you want to call the credit union any queries, they're there to help, of course, as well. But leading on, I suppose, to the Credit Union Amendment Bill itself, credit unions at the moment have significant lending and personal lending. We've over 45% of the market share in personal lending, so we have a great footprint in that. We write over 500,000 loans a year. However, what we see as a sector, I suppose, that what we're really excited about is the Retail Banking Review. The Retail Banking Review, as Jean mentioned, does set out that credit unions could provide a universal service offering. That means that every credit union member across the country would have access to a full range of products and services. And when we look at the product portfolio of credit unions, we're thinking about mortgages and obviously about business lending. And I think the opportunity there is threefold, particularly in the amendment bill on this. One is around loan participation agreements. This is where there's large value loans that maybe a credit union for risk appetite may not want to write all of them themselves. There's an opportunity there for in the new act where that loan could be shared across a number of credit unions. And secondly, as well as the referral of members. So again, a credit union may have reached its regulatory limit, or may actually, for example, again, for risk appetite, may not seek to increase its mortgage lending. However, in this case, again, what they can do is they can then refer the member by mutual agreement between the two credit unions for that particular service. So for example, for the mortgage or for the business loan itself. And I think that's really exciting because that means that credit union members in those communities are getting full access to services. It really does unlock the full potential of the credit union sector itself. And maybe the final point I would touch on is the emphasis of collaboration. That's absolutely key, I think, for the sector going forward. Really exciting in terms of credit unions coming together through potentially credit union service organisations to develop products and services and pool their resources together. And that could be done in terms of mortgages, but also in terms of business lending. And the current accounts that I've already mentioned is already done through a credit union service organisation. So it's already happening in the sector. So look, really exciting, I think, time for the credit unions.
Great. And you mentioned when we spoke previously, the Cultivate initiative, the Agri lending initiative. That's essentially a collaborative initiative among credit unions, which has been quite successful.
It has, yeah. I mean, that's a great example again of credit unions coming together, Michael, and using a common brand, using a standard rate. There's about 50 credit unions now in 150 locations offering that service, and it is becoming the national leading agri lending brand itself, and it's great to see that. And
it's almost like a 21st century manifestation of the common bond in that whole idea. That's targeted at a community.
Yeah, totally.
Supporting a community.
Yeah, very underserved. That was the piece, I suppose, that made, to provide the opportunity there. Banks were not serving the agri community well at all. And that's where credit unions with that kind of really enshrined in the community have really, got a great understanding of the actual farming community, what their needs are. And the chair of that company itself who provides that with the credit unions is Joe Healy, who's the former IFA president as well. So those really strong linkages between credit unions and the agri sector is there now.
And understanding the market and the customer. Sean Hosford, just to bring you in, what's the view on the ground like of these proposed changes? I mean, how has it been? How are they being perceived by members and staff? Indeed.
Morning, Michael, and good afternoon, and thanks very much for the invite. Much the same as David. I mean, there's an air of, I suppose, a bit of excitement around the organisation. As Jean rightly pointed out, I mean, we're 65 years on the road now, and we've had various crossroads that we've come to where our business has kind of changed, and I see this as probably the latest one, where we will begin, I suppose, to up our game again. I mean, what we do very, very well, and that can be seen from research and how our members like us and how the public in general like us. But I think this will take us. I believe that this will take us to the next level. I mean, when you're talking about collaboration, as David rightly pointed out, there's a joke, I suppose, among credit unions that for cooperatives, we can at times be the most uncooperative people, and that probably comes from local credit unions focusing on local issues. But I think we're quite harsh on ourselves, though. I think we have proven over the years, with the likes of Cultivate, with PAYAC, with Metamo, with the proposed mortgage QSO, that we can collaborate. And I think this is an opportunity for the credit union movement to pull all those strings. There's pockets of collaboration going on around the country, and if we can pull all this together, I think I honestly believe credit unions would be serious player in financial services.
And do you see this is a subject close to the heart of quite a lot of our members of Chartered Accountants Ireland, dealing with SMEs, small business. Do you see is there more scope for lending or increasing lending to the businesses coming out of these changes?
I think so, Michael. I mean, credit unions have done business lending for a long time, but at a very small level. Let's be fair. There are some credit unions who are very, very good at it and do it quite well. I know that CUDA have BizFin, which is a framework to assist credit unions in doing business lending. But there's a tremendous opportunity here. Even ourselves here in health services, I suppose the thing that excites us is there's probably going to be a facility where we can look at a lot of the Section 38 and 39 organisations would have members in our credit union. And these organisations probably have lending requirements that we could now look at it in the future, and that these organisations could become members of the credit union. So that kind of has us quite excited at the moment. And yeah, I think there's, and as well from the community credit union point of view, credit unions, as David pointed out, are embedded into their community. Who better to know the local businesses and to provide finance to them than their local credit union.
Yeah, but we're right in saying there are a few barriers to that opportunity. You know, they mentioned regulation. The regulation needs to be adapted. The mortgage and business lending are coming from the same source.
They're coming from this. It's 15%. But I'll give you an example. I mean, health services at the moment. I mean, our loan book at the moment is roughly around, I think, 235 million. We've 10 million out on mortgages, and probably less than 1 million out on business lending. So, and again, I suppose from a regulatory point of view, there has been constant, I suppose, talk about this earned flexibility coming from the bank. And I think if we show the central bank that we can do this stuff and do it well, I've no doubt, and the bank kind of have pushed that door open to say, you know, if credit unions are pushing up against their 15% limit, then they can come and talk to us. So,
okay, great. And there's obviously a skill set, specialist skill set attached to business lending. How do you acquire that, or how do you overcome that particular?
Well, back to David's collaboration. I think that's how it needs to happen. Again, I suppose the thing we don't need to do is have a business lending specialist in every credit union in the country, because we don't need that. By collaborating and sharing resources, I think that there's a huge opportunity for us.
So again, the collaboration, the strength in the network.
Yeah. Sure.
So David, back. Thanks for that, John. That was great. David, back to you. Is it fair to say there's a lot of potential in the sector, credit union sector? And to ask an accountant's question, what do you think the quantum is of that potential?
Yes, Michael, I think there's a huge potential. And if you look at the sector in totality, you know, in Republic of Ireland, there's 17 billion of savings at the moment. 5.5 billion of that is lent out. So 5.5 billion, that's predominantly in personal loans. There are some credit unions who do mortgages and business lending and do it quite well and have significant volumes in it. However, that means there's 12.5 billion that's available there. That is member savings that's available to be recycled, lent out, support businesses, support people buying homes, and put back into the communities. And that's the real opportunity. And I think that's what distinguishes the credit union sector, let's say, from other players out there, particularly new entrants. If we look at new entrants in the mortgage space, a number of them have been very much dependent on the money markets and the wholesale money markets themselves. Credit unions don't need that. Credit unions already have the funds. The members have put the savings into the credit union already. So that 12.5 billion is accessible. At the moment, under central bank regulations, it's mainly in bank deposits. So there's a much more way that can be used much more efficiently, I suppose, particularly. And if we look at the mortgage market itself, last year, I think, wrote about 12 billion of mortgage loans. And you put that in the context of that 12.5 billion, we really strongly feel the credit union sector can play a significant role in that. The credit unions who already are involved in mortgages, there's been a clear appetite that members of the public want that. We've seen a 25% increase in mortgages from credit unions year on year itself, which has shown that appetite for people. And if we look at KBC and Ulster Bank having left the market, that mortgage market is highly concentrated, particularly among the three pillar banks themselves. And if we look at those numbers of the credit union sector in totality, we are the same size as PTSB. That's the numbers, you know, that we're the same size as PTSB. That's our size. And it comes back to that point about collaboration. And that's why I think we're very excited about, you know, supporting credit unions in developing a national mortgage proposition. That's to support them and those who do it themselves, you know, like Sean's, you know, they do mortgage themselves. But all those credit unions who might need support in terms of more of a shared service approach where, you know, we can do the underwriting more centrally and support them as well. And I think the key point will be then having a national message on that. That means standardized rates and a clear national message. And we really think that's, you know, not just good for credit unions, really good for the public. It will give them real choice. And I think the public are crying out for that, to be honest.
Yeah, that sounds great. But is there an element that you're competing? You know, you mentioned the three pillar banks. Are you essentially competing with the banks? And, you know, does that involve then becoming community banks, as it were?
I think we're very different to the banks, and we always will be. You know, going back to that DNA I mentioned earlier on, we're very different. We're ingrained in communities. You know, the number of communities now that don't have a bank, There's no bank there at all. Or even if they do have a bank branch, people are going in and they're just faced by machines. You'll never get that with a credit union. Credit union will always be ingrained in the community itself. And I think, our mortgage offering, we think will be different. It'll be based on service in particular. We'd hope it would be, we'd have a broadly competitive rate. And I think we can achieve that because, again, we don't depend on the external money markets. So we have the money accessible. But on top of that, it's about quality of service. And it's about that service and that understanding of the member. And that all really comes back to the focus we have on our common bond and how we're ingrained in communities. And that DNA, I think, runs through everything we do. It's our raison d'etre, effectively.
Yeah. Anne Marie Ward, you've spent many years, if I dare say, studying the sector and researching it. I think your PhD actually was on the potential of the credit union movement. What do you think are the challenges and risks, based on our conversation, facing the sector, and including those from the changes to the legislation?
Well, the sector faces many challenges. I get to deal with the negative side here, but And also the environment has basically exacerbated the challenges that credit unions face at the minute. I mean, we are living in an unprecedented times where we have an uncertain economy, and we have huge inflation rates and an economy that can be affected by those inflation rates. We have rising living costs and so on. So there's a potential there for increased bad debts, for example, on that side of thing, and increased provisioning for those members that we already have. And then we have huge increases to interest rates that have arisen as the central bank tries to control that. And that has all changed the environment that we're working in. And for credit unions, that has increased their costs, their cost structures, but but it has also brought positives. So although interest rate increases are poor for Joe Bloggs, a man on the street, for a credit union, it probably actually has or could be beneficial, because when there was very low interest rates, credit unions used to cost them to have investments, whereas now there is a potential for there to be a less cost to those investments. But against that, we have the rising costs within credit unions because of inflation driving that up. So when you look at a credit union, really you've got two forms of income. You've got income from loans that they generate to their members, and then you've got income predominantly from investments. And the income from loans to member is the higher value income. It is much greater. And when I look at the credit union sector at the minute, and it has been a long-term problem, the loan ratio is too low. Only to have a third of the assets out on loan, but 30% out on loan is not. It needs to be higher to sustain what credit unions need to do at present. So credit unions, with their in-branch presence, they have fixed costs that have to be covered, on a yearly basis, because branches, naturally will have these fixed costs. And it's one of the reasons why, banks pulled out of community banking. It's for that reason. So credit unions need to be very, very careful. And the way around that is to increase their loan book that they have. And on top of that, that brings us on to another problem. When we look at credit union membership, and again, this is a long-term problem, we have an aging membership, and that's a double-edged sword for credit unions. Not that we don't want members to go away, we definitely don't. We just need diversity in our membership. We need more younger people coming in, because when you look at older people, there is a natural life cycle to debt. And people, when are getting into debt at younger ages now. So when you go to college, people are starting to get into debt at the age of 18, or when they start working even younger, when they, 17, if they go to buy a car, and people's, their aptitude for debt and their need for debt increases right up to the age of 40. As people buy cars, and people, get 7-seaters, people get children, people have holy communions, people have weddings, people have houses that they have to build. And then once you go beyond 40, people start to manage their debt better. And this is the problem. When you have an elderly membership, the need for debt is not as great, but that's the bread and butter of credit unions. That's what they have to have. That's what they're meant to be doing. And also potentially on the horizon, there is this fact that as you have an elderly membership and they pass on, I hate to say that, but those assets that they have in credit unions are going to be transferred on to a younger individual. And there's a potential withdraw, a transfer out of credit unions of all these assets that they have that they need to be careful with. And that brings us into another problem when we're looking at the younger membership, potentially a younger membership, and that is technology. Now, again, there's a lot of very, very sophisticated credit unions out there, and David talked about that, but I wonder how many people realise how sophisticated some of the credit unions are. And also, it needs to be more widespread. When you're looking at an 18-year-old right up to a 40-year-old, they're exceptionally busy. And I don't mean busy just with work. They have social lives I would be jealous of. They shop more, they do more holidays, they go out more, they go to more concerts, they have more friends all over the place. They are busier people. So, and financial services maybe not as important, to them or down on their list of priorities as it is perhaps to us. So to take a half a day off to go into the credit union, to get a loan, is not really on the cards, because the opportunity cost of giving up half a day of their busy life was too great. They need to be able to sit at 10 o'clock at night, Sunday morning on holiday, and get that loan when they have a bit of downtime. And it needs to be quick. It's all about convenience. They need convenience. And if you want to get them in, credit unions really need to embrace that. And that's going to,
it's going to require quite a bit of investment and time and investment to get that right. But I think you're right. It's the expectations have changed.
Oh yeah, they definitely have. And that brings you on then to, thinking about it strategically about a credit union. I mean, it is going to evolve. And I know, and David, and Sean, they've talked about, the importance of face-to-face. And it is, don't get me wrong, that is the defining feature of credit unions. But I think we really need to think about what the branch does and move away from the branch being a transaction-based, because even older people now with COVID, they are transacting online. So I think we need to look at branches where, things like opening accounts, service, financial well-being. It is that advice, it is that face-to-face coming in and selling products and making people aware of what the credit union can do, as opposed to a focus on transactions at branch. So I think we've got that.
So it's technology and the in-person experience combined, is the USP.
And it's all costly. And all costly. And then when you go into technology, and getting all that, I mean, that brings us in then into cybersecurity. The more complicated our credit unions become, and that's inevitable. It's going to happen if you want to be relevant today. And the more complicated, the more you're going to be exposed to cybersecurity. And within that, again, you need in-house expertise. You need to have everybody trained up on it. You need to have internal controls. You need to have good governance around it. So you've got whole cyber in your systems. But not only that, Michael, and this is my last point, I promise.
Sure.
You have, you've predominantly at the minute we do have an elderly membership, and when you're exposing them to these different systems and expecting them to go online, you have to protect them too. So the credit union sector has to actually educate them about scammers, about how to use this technology correctly if they're going to expose them to it. So this is, these are whole areas, and it could go on that I think the credit union need to be as a body, need to be very careful with. And I suppose with all this, then you have the conflict between the large credit unions and small credit unions that may arise. For some, this will be easy to, and others, this may not be easy to. And it is ensuring that the sector manages this well, so that small credit unions don't feel threatened by larger credit unions, perhaps, because they are more technologically advanced and they have these products, that they steal, their members. And that's something that needs to be carefully managed within the sector to enable the opportunities that are available to be embraced.
That's a very positive message, actually, Anne Marie. And I think you're showing the belief in the overall sector, the large and small, and as a collective, as a movement, it's strongest. You mentioned there cybersecurity, which I think has become a pillar of governance and oversight, which I think is a useful segue to ask Jean Boyd about the governance issues for credit unions that come out of the legislation, the proposed legislation and the banking review, and whether you think or how you think the sector can ensure its governance continues to be fit for purpose.
Yeah, I mean, again, I think it's following on from what Anne Marie said. There's a challenge there on the governance side as well, and attracting suitable members to go on the boards of credit unions and to be involved in volunteers or be involved as volunteers in credit unions. And again, there are huge opportunities for people as well to gain experience working with credit unions in a volunteer capacity. And they don't necessarily have to go on boards initially, but they can get that experience, and that can be beneficial to them in their own personal lives as well. But coming back to getting suitable board members, because obviously the governance of credit unions rests on having a really good and effective board. And it's a challenge because, again, the voluntary nature of credit unions, which is, I suppose, part and parcel of our ethos, makes it difficult to go out and find suitable people. You're depending on people to come forward and give the time and commitment to taking up what is recognised as being a very onerous role. I mean, the figures that we've mentioned earlier about 17 billion and 5 billion, all of that requires management. And, while we have a very professional management team in place in credit unions, you're still relying on the board to give strategic direction and to, have overall responsibility for the running of the credit union. So fundamentally, that is a challenge to get suitable people and to attract them onto boards of credit unions. There's also, I suppose, a challenge, and again, Anne Marie mentioned it there about the age of members, because again, the picture that Anne Marie was painting about people up to their 40s, busy, friends, families, starting life, all those sort of things, they're the things that mitigate against giving time over to a credit union, because without a doubt, being on the board of a credit union, there are a lot of responsibilities. You need to get up to speed. There's, a new thing now that is on the horizon is operational resilience, and the Central Bank of Ireland has provided very clear guidance on that, but it puts a strong onus on the board to ensure that their credit unions are operationally resilient. And again, that implies knowledge and, understanding of the topic. So it is, we're finding that, I suppose, board members typically are maybe older because they have the time to give to this and they have the interest. But again, if you're trying to, I suppose, get the ideal board, you need that diversity, you need that mix of younger people, older people, different skill sets. And, I suppose board members being in tune with what the needs of the members are, because, older people trying to think of what younger people want, that's not a great model for achieving it successfully. So certainly there are challenges out there around the governance, getting the proper people in place. Solutions to that, I think, are good succession planning within the credit union, anticipating what the needs will be, reaching out, looking for volunteers, not looking for people just to get involved in the board, but to get involved in other aspects of the credit union. And there's lots of roles, being involved on marketing committees, being involved in investment committees. This would be something that might be very relevant to chartered accountants to get involved with initially on an investment committee and get an understanding of the credit union. And I suppose more generally, training and developing the skills of members of boards is important as well. And I know the Irish League of Credit Unions has a strong learning and development section, but again, I suppose creating that environment where people recognise that if you're on the board of a credit union, you need the skills, you need to be able to do it properly, and you need to be able to acquire the skills to successfully do that.
Thanks, Ian. Is it fair to say it's a good place to start? Except for a chartered accountant attending today, watching it, it's a good place to start their governance career?
I think so. I mean, I got involved in credit unions about 15 years ago, and it was a chartered accountant that I knew personally that asked me to get involved. And up to that, I had no particular knowledge. I mean, I knew that the building existed in the town I grew up in, but I had never been inside in the building. And it was a huge eye-opener and very positive experience for me. And I've really, I suppose, enjoyed the last 15 years or so. My only regret was that I didn't get involved earlier, but it is good. I mean, if you are a chartered accountant, you naturally have, I suppose, financial skills, you have a way of looking at things. But I think being involved at the same time with credit unions helps to broaden that hugely, and you see just a lot of different aspects that I think you wouldn't otherwise be exposed to. So I would recommend it for anyone with, you know, that background. It's a good opportunity to get involved.
And thanks, Jean. And Sean, you've been trying to encourage younger professionals from diverse backgrounds to become involved in your credit unions.
Yeah, a recent PRISM engagement with the central bank, and as I spoke earlier, I spoke about the credit union moving to the next level. One of the things they did ask us to do was kind of do a full governance review and have a look at the skills and competencies at board level. So that needs to be done. But you got to, I suppose, the balance is, as Jean rightly pointed out, there is a democratic process that takes place, that it is the members that elect directors. So look, we're searching, we're actively looking through our membership and kind of identifying people and saying we're short that skill. Let's see, can we get somebody? Yeah.
You know, I think what speaks to people today are the sustainability and ESG issues. We may not have time to discuss that today, but I think that the credit union movement is well placed to capitalize on its history and the ethos, which is, you know, full of social purpose and the importance of community. And I think that's really going to come into its own. And I think that will speak to a lot of people and interest them in being involved as members and as board members and committee members. I'm conscious of the time and that we have some questions that have come in, so I'm just going to ask those, if that's okay, to the panel. The first one is, how did the panel see a universal product offering working in practice? For example, if a credit union that doesn't offer mortgages refers one of its members to a credit union that does offer mortgages, how will this mortgage loan be accounted for in both credit unions? Quite a technical question there.
Yeah, Michael. So I'll take that one. So we're still engaged with the Department of Finance at the moment, obviously on the implications of the amendments themselves. But I think it would focus on where the risks and rewards are. So if the mortgage then becomes a mortgage of the credit union who now has been referred the member, then the mortgage will be on their balance sheet. But there may be a referral fee potentially between the two credit unions as well. But the mortgage would be on the credit union who's been referred the business, effectively, is our understanding of that.
Okay, thanks for that, David. This question might be for you, Anne Marie. Is the playing field to be levelled for Northern Ireland credit unions, i.e. the Northern Ireland Order 1985 to be amended to offer these significant opportunities that the amendment to the ROI Credit Union Act is progressing? These are, as stated, significant opportunities, and we need NI to be involved in this progress. Many reports have been delivered to assess the potential credit unions in NI, and we need to progress action in these. So that's
okay. Well,
really your report there.
Well, it certainly is a breach. What can I say? Politics. You know, unfortunately, the Northern Ireland Order comes under Stormont, and we have not really had a functioning Stormont in a long time. And even when you go back decades, again, we suffered in Northern Ireland, you know, I'm talking 20, 30 years ago, when even the UK legislation moved on and our legislation didn't. And we're still in the same boat at the minute with the Northern Ireland Order. Now, in saying that, there is a lot of potential, because a lot of the legislation is directed from England now, so it does cover us. And we have the potential for collaboration, maybe slightly different to what is going on down south. So I'll give you an example. It's happening in England, where a group of credit unions have got together, and they have, you know, through the trade association, they have formed a partnership with Experian. So Experian's credit rating agency, and Experian has enabled them and provided facilities for them to appear on price comparison sites for loans. And Experian, they run the credit checks, they run the affordability checks for the credit union sector. And also then it comes through when somebody presses apply, it comes through and then it goes on to, it's like a central application site that's not linked to one credit union. So there is collaboration going on there in the background, and we can access that under our legislation in Northern Ireland. But within Northern Ireland, the second problem that we have is we do have quite a fragmented sector in that. Yes, and I know David's there from the Irish League, but we also have the Ulster Federation in the north, and there is a certain and Ulster Federation with nearly 50 credit unions, and again, when you do not have a joined up voice, petitioning as well as it could be. Now they do work together, don't get me wrong, but there is concerns. I do know that there's a wee bit of competition between them too, to be honest. David's going to come in here, but but there is that. But unless they work together, it is difficult to move forward. David, I'll let you in. You probably know more about that.
Yeah, it's a really important point, I think, about collaboration, as somebody mentioned. So we've actually been developing a really strong working relationship now with the Ulster Federation, Anne Marie, and they're actually coming to our AGM in Killarney in April. We're delighted to invite them, and they've been at our Northern Ireland conference back in November as well. So we are working really closely with them now, and I think that's a great point you've made in Northern Ireland. One thing we've got a number of working groups now established. We did a report last year called Unlocking the Potential, and specifically in the Northern Ireland market itself. And one thing we really want to develop is a standardized product offering across the sector, perhaps in a loan, and that also is common branding and a common rate. And that would be a sea change that hasn't happened before. So I think that's something we're really trying to focus on. And there's also 2 credit unions at the moment in the north who are going through a mortgage application process at the moment as well, to get the permission from the PRA to actually do mortgages, and we're supporting them on that. So I do think that kind of, there is a development in there in collaboration, and you're absolutely right, Anne Marie, it's about, the one voice there, and that's something we're working very closely with the Federation on now.
Right, thank you for that. Another question here from Mark Johnson, suggesting the creation of a national database to enable professionals to register interest in joining the boards or board committees of credit unions, and asking whether the Institute would be willing to contribute to facilitating that. We definitely would, something we'd look at. Obviously, there are GDPR issues around that, but it's certainly something we'd look at talking to yourselves in ILCU about, David, and see if we could.
Michael, yeah, just to say, Michael, there's anyone on today from chartered accountants, chartered accountant myself, and what I would say is the experience you get of working in a credit union. I think Jean mentioned an investment committee, maybe being on a board as well. It's excellent experience, and it really is great experience. It gives you a frontline experience, and you also do good for the community as well in that role. Like volunteers, directors spend, hours. Give a number of hours a month, in those important roles. So I would encourage anyone today, to contact me personally if you're a chartered accountant who is interested in joining a credit union in terms of a voluntary role, and certainly we'll pass it on to the relevant credit union. We'd be really open to that. We'd really encourage that as well.
Great, yeah, we'll look into that. That's a great idea. We haven't published Jean's book and worked on it. It's kind of extraordinary just what the workload is of governance, and the amount of committees, and what's expected of essentially are volunteers. But it is just strike me as an excellent training ground, and not just that, it also has a great purpose to it. If you are interested in governance, we have one question as well from an anonymous attendee. Actually, is there a material risk of a loss of community support if credit unions continue not to pay a dividend, especially if combined with many implementing tighter lending criteria?
I think it's something to look at the sector. I think obviously there's a change now in the interest rate environment in the last year. And that's something credit unions will be very cognizant of. I think, you go back to the model of a credit union as well. It's important to note, yes, there's potentially is dividends, and credit unions will always look at that on a case-by-case basis each year. And it's important that any surpluses as well in the credit union are generated, that they're put back into the credit union to either help develop and promote services, or else, be out as a dividend. But there's also an important piece around the loan interest rebate as well that credit unions provide. So that's an important piece as well that they do provide. In terms of interest, they will, stand back at the end of the year and see if they can provide a rebate and interest that was paid during the year. And that rewards borrowers who've taken out loans in the credit union themselves as well.
Yeah. Okay. Thanks, David.
if I might come in there, Michael, yeah, what we found as well in health services, we paid a small dividend last year, but when we research our members, what's more important for our members is that we maintain our loan protection and life savings insurance, or death benefit insurance. We run educational bursaries, we do charitable donations. All that social dividend is still very, very important to members, you know.
Thanks, Sean. Conscious of the time, we have more questions actually that have come in. Unfortunately, we won't have time to answer them, but thank you. Sorry, David. Yeah.
Yeah, just one last piece, I suppose, just on the opportunity for the sector. And I think Anne Marie touched on a lot of, challenges, that are there. But I think really as a sector, we're really addressing those now. And I think on the digital side, just to emphasize that, yes, there's a DNA where credit unions have their branches open, but nearly, half of our credit unions now provide current accounts, and that's access to 2 million members. So I think that's a really important point to note. And a lot of credit unions now are digitalized. And I think what we want to do as a sector is continue to embrace digitalization, but it will never be digital only. It'll always be digital, that human touch. But I think we're very cognizant, I think, Anne Marie, as you pointed out, about, building that relationship with younger professionals, younger members as well, I think, as part of our going forward business model.
I have to say, it sounds from today that the sector is in a strong place, and it can only build on that. But thank you all for the really enlightening discussion. Just to, as I say, thank our panelists, our expert panelists today. I'm very grateful to you all for your expertise and contributions. Professor Anne Marie Ward, Sean Hosford, David Malone, and of course Jean Boyd, for his presentation today and for writing his wonderful book. Jean's new book, An Indispensable Guide to the Governance of Credit Unions, is available to buy from the Chartered Accountants Ireland online bookstore. Thank you all for attending our webinar today. I hope you found it informative and useful. And thank you also to Chris O'Donoghue for his support and event production. We hope you have a good day. Goodbye and thank you.